London stocks snap at Paris's heels. Welcome to Market Insight, I'm Ramzan Karmali. London is coming closer to knocking Paris off the top spot in terms of size of European stock markets. The sell-off in French stocks has brought the gap between the two to its narrowest in 18 months. But has investor confidence in EU's second largest economy been permanently shattered? Well, to help answer that and more, I'm joined by Laura Foll, Portfolio Manager at Janus Henderson. Thanks for joining us, Laura. So what's your take on the market reaction to President Macron's call last week to call snap elections? Do you think it's been overdone?
I think what really came as a surprise is not the results of the European Parliament election, but as you say, Macron's decision. And what's happened is there's been a really risk-off sentiment in the week and days since then. And we've seen a really strong reaction, particularly among European cyclicals. So the likes of, for example, French banks have sold off very severely. We've even seen some filter through into the UK. So, for example, some of the UK banks were weak into last week as well. It's very difficult to say whether it's overdone or not. We don't know the outcome of the election yet. My sense is that people will wait until at least the first round in order to make a judgment beyond that, because the outcome is so uncertain at the moment.
Now, sticking with elections, the UK is just 17 days away from casting its vote for the next government. And if we believe the polls, Labour are set to return to power after 14 years. Rachel Reeves, she could potentially become the new finance minister, and she's been talking today about seeking better trade terms with the EU. This could potentially have quite a big impact on UK stocks, am I right?
It's really interesting to see Labour entering this debate. It's something, so Brexit was something they hardly mentioned at all in their manifesto. You had to go a very long way into it to find any mention of it at all. As you say, she's out there in the FT talking about closer ties with the European Union today without necessarily going into the detail about what they mean by that. They've said they don't mean going into the single market. They don't mean going into the customs union. Nevertheless, I think it's really interesting that they are willing to go into this debate now. Clearly, they've got a very big poll lead. So maybe they feel they have some sort of leeway to enter this. For me, I think closer ties with the EU would be a real positive for not only the UK economy, but for UK equities as well. And the reason I say that is if we think back to Brexit, ever since then, you could think of it as a higher risk premium being put on UK domestic equities. UK domestic equities have severely underperformed more international UK equities, which can often be found in the FTSE 100. If we had any kind of reversal of that higher risk premium on those domestically focused UK equities, I think it would be a real positive for that end of the UK stock market. So I think I was really encouraged to see that article in the FT this morning. I think it would be a real positive if we do try and deepen that relationship again with our biggest trading partner.
Well, one stock that will be under the spotlight tomorrow is Whitbread. It has its Q1 trading statement out. What should we be looking out for?
So the key metric that everyone pays attention to with Whitbread, remember Whitbread owns Premier Inn, is what we call RevPAR. In other words, the revenue per available room. It's been pretty what we would describe as soggy, technical term, year to date. That's been driven by some slight softening in leisure demand. And I think people will be really interested to see if there's any signs of that getting a bit stronger. You could even, people talk about the likes of Taylor Swift having an impact on that number, such as the power of Taylor Swift, that she might even impact Whitbread's revenue numbers. So that would be the area of focus. I'd say the sort of secondary area of focus for Whitbread will be Germany. They are trying to expand in Germany. It's been an area that's loss-making for them, but they're guiding towards it getting near break-even, and people, I think, will be very keen to see progress towards that number.
Now, later this week, we hear from the Bank of England, and it seems markets are completely convinced there'll be no change. But should we start hearing encouraging noises on future easing from Governor Bailey on Thursday?
Yeah, it will be really interesting to see, because remember, UK CPI, so UK inflation, is now very near to the target. The last reading was 2.3%, the target is 2%. So we're getting within a smidge of being at the target. I think the reason that people assume that nothing will happen on Thursday is we are so close to an election now that the assumption is, Bank of England just hold and wait until after the summer. There is no July meeting, so we're probably talking towards autumn when we might get the potential for that rate cut. But it's going to be, the Bank of England will have to be more nuanced in how it communicates from now on. It's harder to say that we need a restrictive policy stance that we have at the moment when inflation is so close to being at the target. Remember, interest rates now, 5.25%, are at the same level as they were when inflation was in double digits. And that's a much harder policy to communicate when we're so close to the target.
Laura Foll from Janus Henderson, many thanks as always for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.